Hello guys, so welcome to the Nexoel Trading Hub YouTube channel. So we are going to be looking at the Euro USD. We're going to be conducting a review based on the weekly Forex forecast that was made available last week. So this is for the benefit of those basically in the mentorship program to further explain the concepts they are learning in the course of the mentorship program. So last week we identified from the monthly time frame, we started a top-down analysis because we are in a new year and we wanted to see the delivery of the past months. And what we saw was price returning into this monthly fair value gap. So this was December's monthly candle, and then we saw this monthly fair value gap. Last week I vividly told us to see further bearish movements, but what we want to anticipate is to see the return of price to mitigate the 25% or the 50% of this candle week, because I made us to understand that weeks are also zones in the market. So we identify from the high there to the low for us to see the dip of price to the upside, meaning we wanted to see a bullish move to the 25% or the 50%. Then we start framing the bearish movement of price to the downside. And for us to establish the confluence of the 25% and 50%, we want to see sponsorship zones in lower time frame. So we now drop to the weekly time frame, and what we can clearly see here in the weekly time frame, based on the identification within the monthly fair value gap, we saw this order block that was violated with this impulsive movement to the upside, and we can see fair value gap in confluence to this order block that was violated. And now we can see the return of price, how price returned into it, and we can see price respected the mean threshold of the monthly fair value gap, and price did not dip lower below the mean threshold of the volume of this order block that we identified, where price gave an impulsive move to the upside and violated it. So now we can see that we anticipated that pullback to the upside, and then for us to frame the bearish movement of price further to the downside, since we identified that we are expecting bullish movement in the dollar index. So you can see this is that monthly fair value gap that we identify. So I told us we should not expect to see price dip higher to this fair value gap, because we can identify in the weekly time frame that this is the weekly time frame fair value gap. And we can see how price went back into it and mitigated the low of the monthly fair value gap. And then we had this bearish movement to the downside. So basically now we identify this is the 25% level, this is the 50% level. And what we can see in the weekly time frame is that in confluence to the 50% level, we can see how price gave us this fair value gap. And we can see the return of this candle, the week mitigated the fair value gap and gave us a down close week. So we anticipated to see the bullish move, since we saw price last week, which was within the month of December 2024, have mitigated the mean threshold of the monthly and closed above it. So we expected the bullish movement above or at the 25%, and then we framed the bearish continuation to the downside. So we drop further to the daily time frame so that we can clearly see zones we could anticipate the possible rejection of price before we have the bearish continuation to the downside. So let's check the daily time frame. So what we can see here in the daily time frame, so let me do away with this level, since we have already anticipated the region we want to see price react at, and we can see how price respected the 25%. So now I'll be explaining the reason behind how price reacted at the 25%. We can see how the candle closed below the 25% that we identified from the monthly time frame. So what we can see from the daily is this is the weekly fair value gap we identify from the weekly time frame. And we can see the return of price, how price mitigated that and then fell to the downside. So, last week I told us that we could see the reaction of price at the daily fair value gap here. That should enable us to identify or to establish if the market is going to fall from the fair value gap. But then we anticipated to see that the market will push more further to the upside to possibly sweep this buy side liquidity. But then I'm going to go to a far lower time frame to explain why price reacted at this candle wick. This is now a rejection block, because what we can see is that this candle swept this candle's high points, because we can see that price gave us relatively equal high points. So if you can remember, if you're in the mentorship program, I gave us some schematics in identifying point of interest. So you can see that this is a pattern that we saw. This is a form of that schematic in the mentorship program when we look at the POI identification session. So now we can see how price swept this relatively equal highs and give this impulse to the downside. So this is a rejection block. So that was why we could see that price return into the rejection block without necessarily sweeping the buy side liquidity, because this candle swept this buy side liquidity. When we drop to a lower time frame, we're going to see that this is actually a consolidation zone. So now we have the return of price to the upside, and now price mitigated the rejection block, and we can see the bearish continuation to the downside. So let's drop to the 4-hour time frame. Now what we can see clearly in the 4-hour time frame, so we can see it here clearly, price is bearish. Price took out this low, so we have a break of structure to the downside. So we know we are anticipating to see that the next drawn liquidity is the buy side, and then we frame the continuation to the downside. Now we can see clearly that this is that consolidation zone. So we can see here we have our consolidation, and we can clearly see how this candle wick swept the buy side liquidity of this relatively equal high, and then we have the fall of price to the downside. So since we're looking for the next drawn liquidity, we can see that this is the valid pullback here, and we can see how price returned and swept the liquidity resting there. So that is our inducement. So we want to identify our inducements after the break of structure or before the break of structure, and we can see this is our inducement. Price took out the inducement, mitigated the rejection block, the open of the candle. We can see how price mitigated the open of the candle and went slightly above the open price, and we can see the bearish fall to the downside. So when we drop to the 2-hour time frame, we saw the order block that price returned to respect. So we can see that is the order block that price returned to respect. Now we can see this is the buy side liquidity. Because we have now price fell to the downside, we can see the pullback. Price gave us this consolidation. We can see that this candle took out this relatively equal high. So we have the gap of liquidity already, and we have the fall to the downside. Now we can see the return to the upside. Price took out this buy side, in extension, this ideal pullback liquidity, this buy side liquidity. We can see that above we also have the fair value gap. Price mitigated the order block, and we can see the bearish fall to the downside. So how then did I frame the entry in the lower time frame to be able to take the opportunity that presented itself in the markets? So let's drop to the 15-minute time frame to look into that. So what we can see now in the 15-minute time frame, we can see that consolidation, how price swept the consolidation and fell to the downside. So what I saw is this. So price returned to the order block we identify in the 2-hour time frame, which is the rejection block in the 4-hour time frame. Now we saw price mitigated that, and now price gave us this displacement to the downside. What we can clearly see is that here we have a break of structure. This candle body closed above this high point. Now we have the displacement. This is part of the model I've been teaching in the mentorship program. So we're also going to continue with the other models which I've not touched in the mentorship program in the course of the mentorship program. So now we can see the displacement to the downside. Price gave us a market structure shift. Price have mitigated a higher time frame zone, and we can see this massive displacement to the downside, giving us the market structure shift. Now we can see this is our order block. So since what we have here is the break of structure, and this is the market structure shift model, and we have a break of structure to the upside. Now we have a displacement to the downside that led to the market structure shift. So we want to identify the next draw on liquidity and the sponsorship zone above the next draw on liquidity. What we can see is this is the pullback before the break of this structure. So meaning we want to see the return of price to take out the buy side liquidity, which is this high. And then we can see price mitigates the order block So now we can see that we saw this consolidation again in the market. And what I use to further identify and establish my entry is the Q zones. So now this is the Asian Q zone. Now we can see that the Asia Q zone, now we can see price give us this movements in the Asia session. Now want to see London session create the high of the day. Since we are anticipating to see bearish movement of price to the downside. Now we can see this is the Asia session and price now began the London session. And we can see the London session is moving higher. So we should look forward to the next drawn liquidity that the market wants to take. And we can see this is the buy side liquidity. What we have is the break of structure model that led to the market structure shift. So we want to see price takes this out. Since price have not mitigated the 50% of this order block, then this order block has the high probability of holding price. Now we can see that the London session gave us that high. And we can see how price was respecting the mean threshold of this 15-minute order block. So this was where I took my entry. You can clearly see that displayed in the chart. And then we have the fall of price to the downside. So this was price delivery on Monday, while this was price delivery on Tuesday. So on Wednesday, this was what happened. We saw how price on Wednesday, this is the Asian session, price took out the high, and London session created the high of the day. And then you can see we have the bearish fall of price to the downside. What you can clearly see is that price returned to this up close candle before this bearish movement to the downside. Now we can see price took out this buy side liquidity. Now the Asia session began. Now price created the high of the day during the London session, which is going to be the Asian and the London overlap. And then we had the displacement fully in the London session. Now we have price continue further bearish to the downside. So here on Thursday, I identified this zone. And then that was where we took our entry from. So this is the Asia session. What I saw was price took out the high of the open price of the day. So we can see this is the open price of the day. And now price went above the open price. And then price gave us the displacement to the downside during the Asia session. And now we saw the London session returning to the upside. Since based on the established bias, I'm still expecting bearish movements. So I anticipated to see that price would respect this up close candle before the bearish movement to the downside when price returned to the upside during the London session. And price is trading below the mean threshold of the daily fair value gap. And now we can see that the London session gave us this return. Because the Asia session also gave us a displacement to the downside. We can see this impulsive movement to the downside that led to a change in states of delivery. So now we have the buy side liquidity, price return. We have the confluence of the fair value gap. Now price mitigated the fair value gap. Though we did not see price massively falling to the downside, except here on Friday where price actually gave us the displacement to the downside. So this was what I saw, and that was how I took the entry. So we're going to look further into this in the mentorship program. I'm going to explain more perspective to this in details during our live session, guys. So cheers and God bless you all.